Current price action on Advanced Micro Devices Inc., ticker AMD, shows the stock trading live at exactly 224.48 USD, registering a positive intraday movement of plus 0.93, which translates to a gain of 0.42% on the session so far. While a move of less than 0.5% might appear negligible to the untrained eye, specifically those monitoring the markets passively through standard mobile interfaces, the underlying order flow tells a story of significant accumulation that defies the surface-level tranquility. The expectation from the broader retail market, often influenced by the flashy, high-velocity headlines surrounding its primary competitor, is that AMD is simply the silver medalist in the semiconductor race, a stock you hold only because you missed the entry on the market leader, or perhaps as a sympathy play that moves in tandem with the sector. The reality, however, which is currently being priced in by institutional algorithms and sophisticated individual brokerage accounts, is that AMD is decoupling from being a mere alternative and is fundamentally restructuring the economics of the data center in a way that the market has not yet fully quantified. We are seeing a divergence where the smart money is betting not on raw training power, where the competition is fierce and expensive, but on the massive, silent, and inevitable explosion of inference workloads, where efficiency and memory bandwidth are the only metrics that matter. This 0.42% rise today is not noise. It is the sound of the floor rising as the market realizes the total addressable market for AI acceleration is splitting into two distinct economies, and AMD is aggressively capturing the one that offers higher volume and sustainability. When you analyze the tape today, the price action at 224.48 USD represents a critical consolidation zone. If you are actively trading this on interactive brokers trading platforms, you will notice that the bid-ask spread has tightened significantly compared to the volatility we saw earlier in the quarter. This tightening is often a precursor to a breakout, or at the very least, a sign that the sellers who were liquidating positions near the 230 resistance level have exhausted their supply. We are seeing a fascinating dynamic where Robinhood stock trading volume, typically driven by retail sentiment and momentum chasing, is actually relatively flat, while the block trades coming through dark pools are increasing. This suggests that while the average investor using SoFi Invest or similar investing sites might be looking elsewhere, perhaps distracted by the volatility in Tesla stock or the consumer cyclical narrative around Apple stock, the institutional giants are quietly loading the boat. They are using this period of low volatility to build positions without spiking the price, a classic accumulation strategy that often leaves the retail investor chasing the move after it has already happened. It is crucial to understand that when a stock like AMD holds the 224 level this firmly in the face of macroeconomic headwinds, it indicates that the buyers are defending this price point with conviction. This brings us to the broader landscape of online investment and how different demographics are approaching this ticker. If you look at the data from Schwab Intelligent Portfolios or similar automated rebalancing tools, there is a noticeable drift towards the semiconductor sector, but specifically towards companies with manageable valuations relative to their growth curves. Investors who rely on investment help from robo-advisors or Fidelity Wealth Management Services are increasingly finding AMD weighted heavier in their portfolios. This is not an accident. It is a calculation of risk-adjusted return. The expectation is that the semiconductor cycle is peaking. The reality is that we are entering a supercycle, where the hardware required to run the AI models created in the last 2 years is vastly different from the hardware used to train them. AMD's chiplet architecture, which allows them to mix and match components to create highly specific, efficient processors, is the reality that contradicts the expectation of a monolithic chip dominance. While the crowd on Robinhood app might be looking for the next 10% pop in a single day, the capital flowing through Fidelity IRAs and Fidelity mutual funds is positioning for a 3 to 5 year horizon, where AMD's cost per token advantage becomes the industry standard for enterprise AI deployment. To understand why this 0.93 gain is significant, we have to look at what is happening with NVIDIA stock. For years, the narrative has been a zero-sum game. If the green team wins, the red team loses. But today's market action suggests a decoupling. We are seeing Interactive Brokers stock trading data that shows hedge funds are no longer pair trading these two as inversely correlated assets. Instead, they are holding both, recognizing that the infrastructure build-out is so massive that one single supplier cannot possibly meet the demand. When you utilize online investing tools to screen for sector rotation, you see that money is rotating out of pure software plays and into the pick-and-shovel hardware providers who have supplied chain diversity. AMD's strategic partnership with TSMC and its ability to yield high-performance chips at a lower cost basis is the hidden catalyst here. The $224.48 price tag today reflects a company that has successfully navigated the transition from being a second source to being a primary architect of the modern data center. Let's scrutinize the volume profile. On a standard Fidelity trading platform, you might just see the total daily volume bars. But if you look deeper at the time and sales data available on more advanced Interactive Brokers platform setups, you will see a pattern of iceberg orders, large institutional buy orders broken down into hundreds of smaller lots to hide the true size of the demand. This is why the price isn't rocketing up, it is being controlled. The Schwab Intelligent Portfolios algorithms are likely picking up on this stability, treating AMD as a core growth holding rather than a speculative bet. This is stark contrast to the behavior we see in speculative assets or even in the Robinhood crypto markets, where price action is dictated almost entirely by sentiment and social media buzz. Here, the price is being dictated by earnings projections and free cash flow models. The disconnect between the boring price action and the exciting fundamental reality is exactly where the opportunity lies for the astute investor who is willing to look past the daily noise. I want you to take a moment right now and comment below with the average entry price of your AMD position, or if you are currently waiting for a dip to enter. It is always interesting to see how many of you have held through the volatility of the past few years versus those who are just now looking to invest online in the semiconductor space. Now, let's investigate the fundamentals that are supporting this price level. AMD is not just a hardware company anymore, it is a platform company. The acquisition of Xilinx and the deep integration of their adaptive computing stack mean that AMD is embedded in industries far beyond just gaming and cloud computing. They're in aerospace, automotive, and industrial automation. When you check your SoFi Stocks app, you see technology, but the reality is that AMD is becoming an industrial staple. The expectation is that their software stack, ROCm, is still miles behind CUDA. The reality, however, is that for the largest hyperscalers, the Metas and Microsofts of the world, ROCm is already good enough and getting better daily. These giants do not want to be locked into a proprietary ecosystem, and they are actively funding and contributing to AMD's open-source software to break that vendor lock-in. This is a massive, underappreciated tailwind. Every line of code that PyTorch optimizes for AMD hardware is a direct deposit into the company's future competitive moat. This 0.42% price today reflects the hardware sales of today, but it does not fully account for the software ecosystem value that is compounding in the background. Furthermore, we need to talk about the client side.
While everyone focuses on the data center, AMD's Ryzen AI processors are quietly revolutionizing the PC market. The AI PC is not just a buzzword, it is a refresh cycle that the industry hasn't seen since Windows 95. If you're looking for investment help or reading through Fidelity ETF's prospectuses, you will see a growing emphasis on Edge AI. This is the idea that your laptop, not the cloud, will process your queries to save bandwidth and preserve privacy. AMD is arguably ahead of Intel in this specific integration of NPU cores. The expectation is that the PC market to remain flat. The reality is that the corporate refresh cycle, driven by the need to run local AI models for security compliance, is going to trigger a massive wave of hardware upgrades. AMD is positioned to capture a significant plurality of this market share. This is the boring part of the business that provides the cash flow fuel for the exciting part of the data center R&D. The influence of retail trading platforms cannot be overstated in how this stock holds its levels. Years ago, a dip in a semiconductor stock would lead to panic selling. Today, users on Robinhood Investments and SoFi Robo-Advisor accounts are conditioned to buy the dip. This behavioral shift has created a higher floor for high-quality assets. When AMD drops to $210